Here's a Wavegenius Elliott wave forecast video for December 2nd, 2013. These are the best case and worst case scenarios for Dow, S&P, and NASDAQ. On the S&P 30-day 1-minute chart, the two scenarios are: 1. The move off of 1777.5 was wave 1 of wave 3. The sideways pattern in the past few days before the fast, deep, late-day correction on Friday was a 2 of 3 before 3 of 3. 2. Second scenario was a move off of 1777.5 was a wave 5 off of a wave 4 that was deeper than normal. It would find resistance at 1811.79 and correct in a deep 2. 1801 equals the previous 4. 1791 equals 0.618 of the move from 1777.5 to 1813. Must hold to sustain the 3. The second scenario is becoming a likely scenario because of the bizarre late-day fade late Friday on the half-day. The best case scenario is that the sideways move was a 4 before 5 in the first wave of a third wave. In order for the best case scenario to develop, the retracement would need to hold at least 1792 minimum and rally over 1813 to set up the 3 of 3. Worst case scenario is a deep fade that takes out 1792. We'd likely go all the way back to the previous 4 and retest 1777.5. Right now, the S&P futures are up 2, but that's not enough to stop the worst case scenario. A clear break of 1810.5 at upward 0.786 needs to happen at the market open tomorrow. 1801 is the immediate previous 4, and we may see that if the indices turn negative tomorrow morning. On the Dow 30-day 1-minute chart, the fade was deep enough to be at least a 2 of 3 before a 3 of 3. The best case scenario is a clear break of 16,142 or upward 0.786 from where we closed last Friday in a 3 of 3 formation. But that scenario would come off of one wave and does not make sense. So I'm expecting a previous 4 test of 16,059 before any kind of reversal. The worst case scenario is 0.618 not holding it at 15,980, but I do not expect that. It actually broke upside 0.618 times wave 1 plus wave 3, fifth wave distance, to the upside before the quick spastic fade into the close. So there's a chance that the correction was 2 before 3 as opposed to 5 waves up. What makes me believe that Dow and S&P are in the best case 2 before 3 of 3 scenario is this chart. NASDAQ 30-day 1-minute chart clearly shows a third wave parabolic move in progress with a minimum target of 4137. That's clearly wave 1 deep 2 to 0.618 in wave 3. So based on NASDAQ's formation, it gives me strong belief that Dow and S&P are in that formation as well. But when the deep fade occurred on Friday, NASDAQ held its ground way better than S&P and Dow. It could be a rotation to tech to window dress into the end of the year. Again, best case scenarios are: 1. S&P breaks 1811 and holds a previous 4 at 1801 before a 3 of 3 reversal. Highest target 1870. 2. Dow holds 15,980 or previous 4 at 16,059 and rallies over 16,142, setting up the 3 of 3. Highest target 16,611. 3. NASDAQ continues its upward 3, 1.618 formation by breaking 4070 and onto 4137. Note: if you want a 23-minute preview of the Wavegenius.com 2.0 beta DVD video instructional series, click on the DVD image now. That's a wrap.